When America targets oil, it's never just about oil. Behind every sanction, every headline, and every political speech lies something far deeper: a silent battle for control over the world's most powerful resource. This week, Washington struck hard, sanctioning Rosneft and Lukoil, Russia's two largest oil giants. On paper, it's about punishing aggression and defending global order. But in reality, it's about influence, leverage, and the invisible currency that runs the world: energy. Every barrel of oil carries more than crude. It carries power. Power to move markets, to control inflation, to shape alliances, and to decide who wins and who struggles. And when America moves to control that power, the shockwaves reach far beyond Moscow. They ripple through Wall Street, gas stations, and even the psychology of every investor watching from afar. In today's video, we're going to unpack what this energy war really means, not just for nations, but for your wallet, your investments, and the way the world works. Because once you understand how energy shapes everything, you'll never look at global markets the same way again. You're watching Mindset for Wealth, where we uncover the financial truths behind world events and help you see opportunity where most see chaos. Subscribe now, and let's begin. When the US Treasury announced fresh sanctions on Rosneft and Lukoil, Russia's two largest oil giants, the headlines called it a bold political move. But politics is only the surface. Beneath it lies a game of power that's been shaping global economics for decades. Rosneft isn't just another oil company. It's Russia's crown jewel, controlling more than a third of the nation's oil output and serving as a key source of government revenue. Lukoil, meanwhile, is Russia's face in the private energy world, a bridge between Moscow and global markets. Together, they represent not only billions in exports, but a pillar of geopolitical leverage. By targeting them, Washington isn't simply punishing Moscow. It's tightening the noose around the lifeline that funds Russia's political and military ambitions. It's saying, in essence, that energy, the same force that powers cities and economies, can also be weaponized. The official reason is clear: respond to aggression, defend democratic values, uphold stability. But in geopolitics, motives are rarely pure. Every sanction sends two messages, one to its target and another to the rest of the world. We can reach you through your economy. Markets reacted instantly. Oil prices spiked before tumbling in wild swings. Traders scrambled to reposition, while investors poured into American energy stocks, betting that disruption abroad could mean opportunity at home. The move reawakened an old truth. In global markets, fear and greed travel faster than any policy announcement. Behind closed doors, energy executives and policymakers understand the magnitude. Restricting Russia's oil giants isn't just about today's supply, it's about tomorrow's influence. The world's energy grid is interconnected, and one ripple in Moscow can echo through Houston, London, and Beijing. And yet, the public often sees this as just another political headline. What most don't realize is that every time energy becomes a weapon, economies become collateral. From inflation to stock volatility, from currency swings to public sentiment, the chain reaction is already in motion. This is how modern power works. Not through tanks or treaties, but through barrels, pipelines, and supply routes. The real war isn't fought on battlefields. It's fought in the invisible markets of oil, credit, and trust. And this time, that war has just been reignited. The moment Washington's sanctions hit the wires, the shockwaves began to spread, not through missiles or borders, but through prices, charts, and screens. Oil futures jumped, then tumbled, then jumped again, as traders tried to calculate the unthinkable. What happens when two of the world's biggest oil suppliers are suddenly isolated? For the US, the move looked bold. For Europe and Asia, it looked risky. Rosneft and Lukoil together supply roughly a third of Russia's crude exports, feeding energy-hungry nations from Germany to India. Cutting them off, even partially, meant disrupting an artery of the global economy. And when you touch energy, you touch everything. The price of oil isn't just a number on a Bloomberg terminal. It's the cost of trucking food, heating homes, and flying planes. Within hours, gas prices in the US began creeping higher. Supply chains, already fragile, braced for another squeeze. Inflation, the quiet enemy that the Federal Reserve has been fighting for years, stirred again. Investors responded the only way they know how, by running to where the money might flow next. Shares of American energy companies like ExxonMobil and Chevron surged. U.S. shale producers, long pressured by low margins, suddenly looked like safe havens. Hedge funds started betting that domestic oil would become the new global anchor. But not everyone benefits from volatility. Airlines, logistics firms, and manufacturers saw costs rising overnight. The consumer, the backbone of the American economy, once again faced the hidden tax of geopolitics, higher prices at the pump and higher bills at home. Meanwhile, in Moscow, the Kremlin framed the sanctions as proof of Western hostility and vowed retaliation. That response added yet another layer of uncertainty, feeding market anxiety across Europe and Asia. Energy traders described it best. This isn't a market anymore, it's a battlefield. Yet amid the chaos, something deeper was unfolding. The world wasn't just watching an oil shock, it was witnessing a power shift. As Russian energy faced isolation, the US emerged as both enforcer and alternative supplier. The paradox of control and dependence. Every barrel of oil removed from global trade doesn't disappear. It simply changes hands. And every shift in supply changes who holds the leverage. The ripple effect of this sanction isn't measured in barrels or dollars. It's measured in influence. And influence, once lost or gained, rarely fades quietly. Power has always been less about possession and more about perception. In markets, as in politics, it's not who owns the oil that matters most. It's who others believe controls it. That's the essence of energy's psychology. Every nation, company, and investor acts not just on data, but on emotion. Fear of scarcity, hope for stability, and the illusion of control. When Washington sanctioned Rosneft and Lukoil, it didn't just disrupt supply, it disrupted confidence. And in economics, confidence is currency. Think about it. Oil is physical, but its price is psychological. The world pays not for what's in the ground, but for what it believes can be delivered tomorrow. That belief drives markets more powerfully than any barrel ever could. This is why energy policy feels like a chess match, because it is one. Each move isn't about immediate victory, but about shaping the perception of strength. When the US acts, it signals to allies that it can protect them, and to rivals that it can pressure them. That's the unspoken currency of geopolitics, trust and fear, priced daily in dollars and oil. For investors, this is where mindset becomes everything. Those who panic at every headline often miss the deeper rhythm of how power shifts. The smart investor understands that volatility isn't random. It's the emotional echo of policy, politics, and human behavior. Just as nations compete for energy dominance, investors compete for clarity. Both chase security in an insecure world, and both learn, eventually, that control is an illusion, whether you're managing a portfolio or a country's oil reserves. The greatest investors, much like the most strategic nations, don't react to every tremor. They anticipate cycles. They understand that in energy, as in life, every boom plants the seed of its own bust, and every crisis plants the seed of opportunity. The psychology of power is simple, yet timeless. Those who can remain calm while others panic will always inherit the leverage. And in this energy war, the one nobody sees, that leverage is worth more than oil itself. Every time the world faces an energy shock, we're reminded of a truth that never changes. Control over energy is control over destiny. The headlines may fade, prices may stabilize, but the power dynamics behind them remain, shifting quietly, reshaping economies, and rewriting the future. The sanctions against Rosneft and Lukoil will echo far beyond Russia. They mark another chapter in a long story, one where nations trade influence through barrels, currencies, and alliances. But beneath it all lies something deeply human, our instinct to control what we fear might run out. Energy is not just a commodity, it's a mirror, reflecting how we think about scarcity, risk, and security. The real lesson isn't about oil. It's about understanding how psychology drives every market, every policy, every decision. Because when you understand the mindset behind power, you begin to see the world differently, not as a series of crises, but as a pattern of opportunity. And that's what we do here, every week. You're watching Mindset for Wealth, where global events meet financial wisdom, and where chaos becomes clarity. If this story changed how you see the markets, hit subscribe, stay curious, and remember, wealth begins not with numbers, but with perspective.